All right, folks, we are back with one of our favorites. It's Mark Kohler with KKOS Lawyers. These folks have helped me with my estate planning and some of my legal work, setting up entities, setting up my family's trust. And it's just always a pleasure when we can get and tap into Mark Kohler's vast knowledge on all of these matters. And we appreciate your time today, sir. How are you doing, Mark?
Oh, good. Thanks for having me. You forgot my favorite topic, taxes.
Yeah.
I'm also a CPA and I love to save taxes and I love crypto, man. I bought 50 grand worth of XRP over the weekend because it is down and I know it's going to fly again. So I'm stoked on that. But
Well, that was my first question, Mark, is if you had capitulated or if you were still holding, if you were still buying. But that's great.
I get lucky. I've, ridden the downward trend at times, but last fall I pulled a good chunk of money out of XRP when it was still hovering at the 250 low twos, which was good. Took a little profit off the table and did a hard money loan on a 12 and 2. So I averaged 14% on that. And then I just closed that out and I'm coming back with a vengeance. So while XRP's down, I'm buying and I'm
Good,
excited for that.
good. We love to hear it. And so, Mark, we're excited to get into this. I wanted to start. We're going to talk taxes first, folks. We're going to get the that word that we don't like to talk about, the topic that can be kind of boring, but that's why we love talking to Mark is because he makes it exciting to talk about taxes. We're saving money, and we should be excited to talk about this topic. In the crypto space, we want, hey, what's the next 10x crypto, bro? Instead of focusing on, what are you going to do after you make a 10 bagger on a crypto? God willing, this crypto market will turn back around. We'll start making money again. And then if you don't have a tax plan here, you're going to be handing a lot of it back over to the government. We don't want to
Yeah.
be doing that. And that's why we tap into Mark's expertise and knowledge here. And so, getting started, Mark, we have the Clarity Act, which is being proposed, and we're very close to getting that done. It doesn't do much to change or address the tax situation, but we
Nothing.
do have a 1099 DA form that's now mandatory. So, we've started to get those from the exchanges. What's the fresh update? What's new? What do we need to know for tax filing season this year? Obviously, we can't do anything to change our tax situation for 2025. But what should be top of mind for investors?
You bet. Well, as you state and summed up, Clarity Act, it offers no new tax strategy or tax savings for crypto investors. It was mostly on the SEC regulatory front, providing clarity in regards to Wall Street and their perspective on cryptocurrency. So over on tax planning side, this 1099 DA is it's just like any other 1099. Like you sell something on eBay or you're a contractor, you get some work done, you're a consultant, you get a 1099, you got to claim that income. Yeah, so, but I'll clarify what the 1099 DA is. Then we're going to talk about 1099s in general. The 1099 DA is now a requirement from the different exchanges that they send out a formal 1099 by the end of January or February, depending on some different rules. But those need to be out to anybody that had a capital gain during the year. So they bought and sold crypto on their exchange. They're going to send out that 1099 DA. Now, some of you are like, well, dang it, I can't believe they're going to do that. I've got to pay taxes on it now. You had to before. I'm sorry, I hate to tell you. The 1099 DA just makes it easier for the IRS to track you down. But I have to just point this out. As terrible as you hate hearing this, and this is my real estate investors, my crypto all alike. When you make money, you've got to report it as income on your tax return, whether you get a 1099 or not.
Mm-hmm.
If you get audited, you can't say, well, I didn't get a 1099. It doesn't matter. So just know that this should be a non-issue for all of you that are out there doing it properly anyway. And I'll give you some tips on reporting as well. But that's the first news there.
Mm-hmm. Mm-hmm. Yeah. And so, I mean, that was my take basically is that it just makes it easier, right? Because these exchanges will be providing that to you. You can hand that off to your accountant. and it streamlines the
Yeah,
process.
I would offer it's actually deceptively easier and it could screw you up. Here's why.
Mm.
You can't trust the exchange that they got it right either.
That was
My
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 next
grandma
question.
last year, she's
Yeah.
like still using pencil and paper, and she got her 1099s from Schwab and Merrill Lynch and Fidelity, and she likes to sit down and track it. She found three mistakes where Fidelity had over sent her more than on the 1099 that she was supposed to get, and Merrill Lynch had missed some money that she had earned on the 1099. These are just a form they're required to send out. They don't double check that it's exactly right and stand behind it. Read any 1099 statement that comes to you from a broker dealer or an exchange. This is just for information purposes. Good luck. Go get your own accountant. Report what you earned anyway. It's
Yeah.
just a, so let me say as well, the 1099 miscellaneous you might get as well, the 1099 MISC, because if you're earning rewards on any of your crypto, which many of you listeners, watchers do, you're going to get a 1099 miss for that.
Mm.
Well, I didn't sell my rewards yet. Doesn't matter. When you earn rewards, you got to claim that income as ordinary income. That's not even capital gain. Then when you sell the rewards, that's going to come back on the 1099 DA. So you can get two 1099s, one for the rewards you earned, one for the DA. So let me just say, here's the tip. Use Coinly or one of the big tax software companies out there. I love Coinly. I've got a link that maybe if you don't have, I can share with you, Zach, for your listeners, and get you a little discount on the service. A lot of times, depending on your transaction load, it can be 50 bucks, 100 bucks. And
Yep.
they go through all your wallets and tell you what you really earned. And
Right.
I'll tell you right now, 60% of the time, it won't even match the 1099s.
Oh, wow.
Do not just trust the 1099s and think, oh, that 1099 is lower than I thought. Doesn't matter.
Mm.
Hire the right software, comb through your wallets, do it right.
Yeah, I guess because that was my next. I think it's so great that you pointed this out. This is why we get you on, Mark, because folks need to double check your cost basis and go through and double check the whole thing. But if you're bringing assets off of a cold storage or a different exchange, loading them up on the exchange, they might not know what your cost basis is. And so I've seen some folks complaining about the Coinbase process of inserting your cost basis. They have a new platform for that. So there's just going to be some kinks to work out, but hopefully, if folks using software, hire a professional accountant, somebody to help and prepare your taxes, you'll be able to get it done. And then it's important, as you mentioned too, that the passive income that you're earning off those rewards and staking, that's going to be taxed as ordinary income, and folks need to be ready for that one as well too, right?
Yeah, and you may think it's passive because you're earning it while you sleep. So conceptually for you, it's passive,
Right.
but it's non-passive in the IRS world. You're going to report that as ordinary income taxed at whatever marginal rate, the same as your W-2. So make sure you're tracking rewards. And here's another point. When you go to report all of this tax information, by allowing one of the exchanges to do it, they're hopefully going to be able to find your basis. Now, like you said, you may go, well, I transfer that over from a cold storage wallet, and my basis is way low, way higher, or whatever the case may be. If you can't back it up, it'll be zero. I mean, you're going to pay tax on the entire gain. Because at the IRS, when they audit you, they'll go, oh, you plugged in a different basis number? Yeah, I remember I bought it for X. Okay, prove it. Well, I know I did. Prove it. If you can't prove it, it's going to go to zero. So be careful just plugging in what you think the basis is. If it's zero and you can't prove it's otherwise, you're stuck with that.
Are you seeing an uptick in audits of crypto investors right now?
Oh, absolutely. The IRS has task force on this, and you may be going, what the heck? Well, my wallet's under this obscure email that I use to set up my Gemini wallet or my whatever wallet. Guess what? It's called the. Sorry, I know you're going to edit this. I'm right. Forgive me here. I'm trying to think of my word I want to use. Zach, what do you call it? It's, oh, I want to say open source, but the crypto is,
Decentralized?
no, blockchain. Okay,
The blockchain.
sorry.
Okay.
Yeah.
Okay.
So,
I got 10 minutes noted. I'll edit that out.
okay, thank you. Okay, sorry. Um, the blockchain, anybody can see it. The IRS knows that.
Yeah.
They're watching the blockchain and they will follow the money. I mean, do we have to watch Jason Bourne, or any of our spy novel movies? They will follow the money on that blockchain until someone takes it. Boom, game over. So, unless you plan on leaving it forever and dying, okay, well, your family's going to pay tax on it, or whoever gets it. So, just be careful thinking that the IRS can't see what you're doing. It's the blockchain. That's what we love about it.
Yeah, I just thought of this, Mark. It's so funny. Last time I had you on the show, I was complaining about Washington State adding the capital gains tax. Well, now they've introduced the millionaire tax. I don't know if you've seen that as well,
Yeah.
too. So, I don't know if you have any tips other than like you told me last time to just get my butt up and move out of this state. But
No, well, okay, let's shift to some tax strategy here.
yeah, let's get into it.
I The best way to avoid taxes with your crypto is to not pay tax at all. And I know you guys get sick of me saying it. I've been pounding this drum for 20 years. Fund your crypto Roth IRA first before you do anything else every year. And I know you guys are my crypto clients, they're always buying crypto. I'm buying crypto. The first 7,500 you buy this year, buy it in your crypto Roth. Then go back to keep buying it in whatever platform you want. But that $7,500 will never get taxed again. And you can always take out the $7,500 tax-free, penalty-free, but any gains are tax-free. And you may go, well, I can't touch it till I retire or later. I know, that's the good thing. Do you know how many clients I meet that are in their 50s and 60s that are scared to death with no retirement? You want that crypto Roth growing out of sight, out of mind. So that's one of the first things I can tell you is to just make sure you're always buying your first 7,500 in your crypto Roth. Number two, when you harvest some profits, diversify a little. Maybe buy a little real estate or some rental business where we can depreciate some equipment or a property and offset your crypto gains. We call it a lazy 1031. You're selling some crypto, but you're offsetting it with another strategy. And then you're selling crypto in your Roth and not paying tax at all. Eventually, you've got a plan where you're not paying taxes. So let's just move forward and talk about some proactive tax planning. There's two main strategies for crypto investors that I talk about all the time. Number one is whenever you sell crypto and you know you've got a capital gain, take some of that profit and reallocate it with a different asset class. Rental property, real estate, personal rentals like a Turo or Outdoorsy Waverly, because then I can take depreciation on a piece of equipment and offset your gain, but also create cash flow in a different asset class. My quality real crypto investors, or I don't want to say quality, but my stronger crypto investors are diversified. It's not all crypto. I love crypto, but I gotta have other options too. The second strategy is making sure you're always buying your first $7,500 of crypto in your Roth IRA, a crypto Roth IRA. I can look at it right now on my app and see where I'm at on crypto. And I want to be buying that first amount every year. And then after the 7,500, I buy it in my individual name. It's fine. And so I'll never pay tax on that again. I can pull that money out anytime I want, tax-free or penalty-free, my contribution. But the gains continue to grow. And some people say, well, Mark, I don't want to wait till I'm retired to get the gains. Yes, you do. I meet so many people that are in their 50s or 60s that have no retirement at all, and they're scared to death. Trust me, that little crypto account and your Roth growing every year, it'll be $1 million.
Yeah.
And it'll be the best thing you ever did when you're 20 years from now. So just be patient with it. It's a long play on that.
Yeah. Yeah, and I'm glad that you mentioned that because I had said that there's nothing you could do to change your tax situation for 2025, and that's true, but you can fund your Roth IRA till tax day of this year, right, Mark?
Yeah, and that's a traditional IRA, and you could get a tax deduction for that.
Mhm.
I just shot a video on my channel on the difference between funding a traditional Roth before April 15th. I generally say not worth it. Yeah, you get a write-off now, but I'm going to pay tax on that gain. I want the
Right.
Roth IRA where I'll never pay tax again. So
Right.
eat the frog, deal with the tax with last year, and then be more proactive in 26 and moving forward.
Yeah, and can you talk about this mega backdoor raw strategy that you broke down? We had you come to a call with my Discord group, and that was an amazing call. For those of you guys that weren't able to see that, if you're in our Discord group, we do have the recording still available. That was about an hour, 20 minutes, jam packed. But for the broader audience here, Mark, can you break down that?
You bet. The basic backdoor Roth and then the mega backdoor Roth. The basic backdoor Roth just means if you make too much money, as your financial advisor or accountant may tell you, and say, well, you make too much, you can't do a Roth IRA. No, I can do a traditional, not take a write-off because I make too much money, and convert it to Roth on day two and still buy my crypto. So a backdoor Roth is just the way the wealthy continue to contribute to Roth IRAs. And they do it every day. I do it. Many of you are outside the income level. So you're going to use the backdoor Roth. That's basic. The mega backdoor Roth says that if you're a business owner, maybe you're doing some 1099 work on the side, 4 out of 10 Americans now have a side hustle with a 1099. We could drive that into a solo 401k, a crypto Roth solo 401k, and stack it with your regular Roth IRA. We could hit over 70, 80 grand this year.
Wow.
So it's all Roth money. You'll never pay tax again, but you need the small business or a 1099 on the side. And then I can carve that all out into a mega Roth. Very common. And it's just incredible. There's so many options.
Wow. Yeah. So, okay. So we got two different ways to do that. But, we're getting into strategies here, Mark. You've laid out here that 4 out of 10 Americans have a side hustle. Since you mentioned that, I just wanted to beat on that a little bit more. In this economy, I talked about this back in 2022. I put out a recession to-do list, and my number one item was to get your income up, figure out how to get a raise at your job, work those OTA shifts, make as much money as possible, start your side hustle, because the thesis was inflation's not going away. And, 4 years later, it's proven out pretty well. And to your point here, some folks having to take a second and third job, not because they want to, because they have to. But if we could start to shift that thinking into getting proactive, getting a side hustle, maybe something that we enjoy, we can monetize our hobby, but then we also get the tax benefit on that as well. So could you just speak to how, the average American can be thinking about doing this for themselves right now?
Yes, and I'll give you a perfect example. I just had I went to the doctor and met with my PA. As many of you know, when you go to urgent care, to your doctor, nowadays you're going to meet with the physician assistant. They can prescribe anything you need, and they're awesome. So I was meeting with my PA, and she was talking about, because she knows I'm a tax lawyer. She's like, I'm like trying to get medical advice. She's trying to get tax advice. She's awesome. And she was like, yeah, I'm working 3 jobs. This is a PA making over 100K a year because things are tight, family, yada, yada, right? Recession issues. And I was like, oh my gosh. She is picking up a second and third job where she's paid by the hour. There's a ceiling on how many hours a person can work, for crying out loud. Time away from her family and kids because she's going to go work 3 freaking jobs. Now, let's just say, best case scenario, she's making $75 an hour, maybe 100, which is average for a PA, $50 to $100 an hour. And that would be approximately 100 grand a year to 200 grand a year salary. Doctors make good money, right? So $50, $75 an hour. She's going to pick up another job at the emergency room to try to make ends meet. I was like, what the hell are you doing? Some of you were like, that sounds pretty good, Mark. I'd do that. How many of you have had a mobile IV lately? Have you had one, Zach? Do you like doing the mobile IVs?
Yeah, no.
You haven't done one? Oh my gosh, they're incredible. For anybody who's out there that's, been listening, they're incredible. You get hydration, some shot of vitamin B and D and E, and you're like freaking feel like Superman the next day. And a mobile IV is going to run you from 250 to 450, depending on all the vitamins you want to throw in that bag. So a mobile IV, they're everywhere. They're amazing. Did you hear that? 250 to 450 for a mobile IV. They're done in an hour. There are so many nurses and physician assistants and doctors that are even starting mobile IV businesses on the side as a side hustle because they have industry knowledge and expertise, and they knock out just 10 mobile IVs a month. So if they can just do 10 IVs a month even, that's another $3,000, averaging $300 an hour, not 50 to 75 an hour. And you say, well, Mark, you got the cost of the bag and the IV and the hydration and all that. Yeah, okay. At best, you're going to take a third off for cost of goods sold. So now she's making $200 an hour, almost tripling what she was making working at the emergency room. That's a small business on the side. And she gets to write off auto, home office, and da-da-da. Now, I know that was a lengthy example, but I want to let all of you know, whatever you're good at, whatever your industry is, find a way to make it an independent contractor relationship and build your own book of business on the side. You're oftentimes going to make 4 to 5x what you would hourly, and you can start building a business that could become your main hustle. And you're hiring other people to fulfill the services that you know all too well. That is the benefit of a side hustle, because you're going to pay less tax on that money, and you don't have a ceiling on an hourly wage. And maybe that example resonates with some of you, but even a doctor can go out and 3x their income by not working for the hospital, but working for themselves.
Yeah. And that way you're not just selling your time either. You're selling a product and a service. And I think that's a great example, right? There's a lot of people that could extend that to whatever they're in, right? If they're in the trades, construction, maybe there's a side hustle that you can pick up on the side that kind of aligns, runs in parallel with what you already know and do on a day to day.
Yeah.
So I think that, almost every person can find a way to create that side hustle. Obviously, we're not just creating a business to get a tax write-off, right? We don't want to let what's the saying? We don't want to let the tax tail wag the dog, right? But why not? You're going to need the income to survive inflation, and you might as well get the tax benefit as well. And I don't know about you, Mark, but I love the work that I do. And when you get to that spot in life, then it doesn't even feel like you're working every day, right? We just do this every single day. And but Mark, I guess let's get back to the strategies here. So fund that IRA. We have that. We have some real estate investments. We need to diversify. You pointed out that. Any other things that you like your clients are diversifying into right now besides real estate?
Well, you bet. And I was actually just pulling up one of my financial calculators because I was like, in some of these examples, when you do the side hustle, after taxes, in my example, if she made $2,000 a month after taxes and just put that away in the solo 401k that would be with her side hustle, she could easily put away $24K a year. And if you were buying crypto with that, $24K a year over the next 4 years, I was just starting to do the math. Depending on the ROI, that could easily be $1 million in 10 years. And if you only do it for 2 years and tap out and just let that money grow, just do it for 2 years and just get it rolling. And anyway, it's just phenomenal what the numbers can be. So for tax planning, what are some other assets that work to help create some tax benefits? If you're not going to go real estate with your crypto gains, I love oil and gas. It's called the intangible drilling cost tax strategy, because you can invest in oil wells and rigs, and it's, if you don't remember Trump saying drill baby drill in the US, it is incredible. And the cash flow, and you don't have to have material participation like you would in real estate. Also, when I say real estate, some of you are like, well, I don't qualify as a real estate professional. What can I do? Well, you can buy your own building and rent to your business, and you can even do a short-term rental. and meet the material participation loophole much faster than having to be a real estate professional. So I love that. We have clients buying a lot of Turo vehicle rentals and Outdoorsy and Waverly, where you can buy an RV and rent that and make quite a bit of cash flow. Equipment rental. Clients are very involved in that strategy when they can create cash flow again and a massive depreciation write-off. Crypto mining. Some of you out there in this crypto industry are going to hear about people buying mining rigs and depreciating them. The problem is, if you have a service company running your mining rig, you are not going to make material participation. So that depreciation write-off is going to stay with the mining rig income. It's not going to flow over to your other gains. So be careful with that one too.
I was going to ask you with, I know the oil and gas and the drilling there. Is there anything that is similar with precious metals? Our community is big into gold and silver. Some of us have been investing in the miners as well too. Is there any benefits similar to oil and gas for that industry?
Well, you said gold and silver, and then you threw out mining. So
Yeah,
first, gold and
the
silver.
mining and production of them.
Gold and silver precious metal?
Yeah.
Um, no, I'm not aware of anything there. Because the material participation exception is for oil and natural gas, not for gold and silver. So if you're going to invest in exploratory precious metal drilling, you're not going to get the flow through tax benefit. It has to be oil and gas.
Okay.
Kind of a fossil fuel lobby deal. But yeah, nothing there. And mining for those, yeah, it's going to be outside the scope.
Yeah. And I guess since I brought up precious metals too, a lot of precious metals investors sitting on big gains right now. And so we've seen some changes, back to my state. We just implemented a sales tax on precious metals, while some other states are actually removing taxes on that, making it legal tender. So another burden for us here up in the Pacific Northwest. But all of these strategies would apply, similar to crypto investors that got big gains or precious metals investors that got big gains. But is there anything that is different for maybe for gold or silver investors that they could keep in mind?
Not what I've already mentioned. Nothing.
Okay.
Yeah. Sorry.
Yeah.
So keep this in mind, everybody. There's three ways to save taxes. I can find an offsetting investment in the year I make the gain. So if I sell crypto and have a gain, I sell gold and silver and have a gain, I got to go buy something that I can depreciate and write off against that gain. Well, if you're like, well, I just want to buy more crypto, then bend over. You're going to pay tax on it. But option one is find another investment that will give you a flow-through loss without chasing a write-off. Like, I want to do a good investment that gives me a write-off, not buy something stupid just for the write-off. Not smart. But the number one option is an offset. Number two is defer the gain. So I'm going to spread that gain out over time. I could do a opportunity zone, which are going to be hot in 2027. Not this year. They come out with a vengeance on 1/1/27. You'll hear me talk about that a lot more. You might do an installment sale. It's going to be hard with crypto or precious metals to do that. You might do a charitable remainder trust where you sell it tax-free and then create a stream of income that you have the rest of your life. I love the CRT. Go with the CRUT, charitable remainder unit trust. Got plenty of videos on that. Then the third option is not even paying tax in the first place. Roth IRA, Roth 401k. I have clients with over $100 million in their Roth IRAs. And they started 10 years ago, 20 years ago with just $5,000, just like everybody else. So you can do this in a crypto scenario as well, or precious metals is going to be a little harder to get that run, but silver's hot right now. But anyway.
Yeah. And by the way, guys, if you haven't already, go subscribe to Mark Kohler's YouTube channel. I watch all of Mark updates myself just to stay fresh on this content. Mark does a great job of, integrating the new changes into his content, explaining the tried and true methods, but also staying up to date on new changes as well. So if you haven't already, we'll plug it up down below, but make sure you guys go subscribe there. Final question on taxes before I want to get into estate planning. Wash sales, still legal from my understanding. Is there any changes, anything we need to be aware of with that, Mark?
No, no changes. Still a great strategy. Right now, with crypto down, this is a time to sell and rebuy at the same dollar amount,
Yeah.
uh, and harvest that loss, and it'll be sitting there to cash in at the end of the year.
Yeah. Yep. So something that a lot of people should be considering right now, you bought into XRP above $3, above $2. Here we are at a buck 30, buck 40. Great time to harvest some of those losses, get right back in, and you'll be able to have that loss, to be able to use later this year. So into estate planning, we got you started to mention some trusts here, Mark, and I wanted to get into that. So can you run through some of your favorite trusts that you like to use? Your firm did set up a revocable living trust for me and my family, and we are going to have to make one change to that here shortly. I'm going to be reaching out to my lawyer because we got baby number 3 that's going to be arriving, so I need to add him to the trust now.
Congratulations. Yeah.
Yeah, we're
Cool.
excited about that. But can you run through some of your favorite examples that you guys like to use over there at your firm?
You bet. Well, first of all, I'll save you some money. You don't need to call the lawyer at the office and change your trust. When we design a trust, it says, here's my children and any others born to me or adopted by me.
Mm,
And you treat them all the same.
mm,
Um, so I would not recommend you worry about a modification to your trust. It's already going to grab that extra
mm,
kid. It's when I recommend changes is if as your kids get older, they could be facing challenges and you need to put special rules in there. Heaven forbid a kid is handicapped or in rehab or marries the wrong person, who knows? So you might want to put some protocol in there. If you get divorced, um, if you need to do some additional tax planning because you hit it big and you're worth over 20 million, we might talk about it. But once your revocable living trust is done, you just need to look at it every 5 or 10 years and see if something significant, like I just talked about, has happened.
okay. Okay.
Um, so, what is the basic trust everybody needs? And guys, I'm telling you, 95% of you listening today, this is all you need: a revocable living trust estate plan. Run you 2 to 3 grand, maybe 4 at the most, and that's if you're worth, again, 20 mil or more. Just all of our clients we take care of for around 3, all over the country. It is to protect your estate from misuse, waste, probate, and lawyers if you die. It leaves all the money to your family members the way you want to. That's it. There's no asset protection. You might get some privacy strategies there. That's it. Well, Mark, I need an asset protection trust. Really? Tell me about it. You're worth 40 mil? You want to go spend money for that? Because you're going to get some cheapskate crap law firm, or worse, a non-law firm that's going to sell you a constitutional Delaware statutory trust, blah, 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 for 20 grand, 30 grand. It's crap.
Mm,
I'm a lawyer. I'm in multiple states. I've got 15 lawyers that work for me. We would love to do asset protection trusts. They're not what they're cracked up to be. And they get sold to people with fear tactics and charge these $20,000, $30,000 stupid trust fees
mm.
for an irrevocable trust that, oh, Mark, but you don't know. My attorney is great. Really? You know how many books I've written on this? You know how many lectures I've given around the country on this? I'm looking across the room here at my bookcase. I've got every book on asset protection. You don't think I'd sell it if I could? I'm a lawyer. I want to make money. Be careful of any of these irrevocable trusts.
Mhm.
They are irrevocable. You can't change them. They have tax ramifications. Mark, I want to own nothing, control everything. Oh yeah, tell me how that works out. Do you know how many we've had to unwind for people?
Mhm.
It is a nightmare. Get 2 or 3 opinions before you pull the trigger from someone that's not selling you one.
Mhm. Mhm. Mhm.
Please be careful.
And that's just great advice across the board for anything, guys. Get 2 or 3 opinions And if you are listening to somebody, just understand what their incentive is, what they're incentivized to sell you. And I think that, Mark, you've done such a great job with just laying out that education and helping people make a decision, whether they work with your firm or not. They get educated by listening to you. And that's really what we appreciate so much.
Oh, well, thank you. I just be careful. So a revocable living trust, simple, easy, beautiful. That's what I have. Every one of our clients that we can get to do their estate planning, that's what they need. It's amazing.
And when I did mine with you guys, I got a couple strategy sessions too with the lawyers as well. And that, it's not just 3 grand for the binder gets sent to you and that's
Oh,
it. You guys sat down with me, we walked through it. I got educated on what I needed, what we didn't need. And the whole process, end to end, was just seamless, super easy, but also very informative. And I tell you what, guys, once you get it done, you just feel more confident as a man, as a father, right, as a mother, whatever your situation is. Get this done for you and your children. You don't want your little ones to have to go through any of this. It's more than just who am I gonna leave my crypto to? It's if something, God forbid, happens to me, who's gonna be in charge of my children? What other businesses do you have? Right? Even if you're not worth big money with a big plan, just a simple, revocable living trust here that Mark's firm will set up for you, or whichever firm you use, is in most cases going to suffice. But Mark, let's talk about this. So somebody just asked me about a 453 deferred sales trust. Um, I'm hearing a bunch of other ones. I don't know if that's an irrevocable trust, but can you run through some that you like, some that you don't like? Give us that list.
deferred sales trust. There's a lot of variations of them. Oftentimes, the people selling them are using the more aggressive type because that allows them to really wow their customers or clients. The deferred sales trust is on the IRS's dirty dozen
Okay.
because they're oftentimes a disguised monetized sales trust, a monetized installment sale. They are not good. This is like the FBI's most wanted signs at the post office. The deferred sales trust has a face on it, and it's at the IRS Service Center as their dirty dozen. We will audit you if you do this, dumbass. And so please careful of someone trying to sell you on a DST. Get a second or third opinion. And by the way, even if they work, it's a glorified installment sale.
Hmm.
Is it? Which I like. Let's say I can,
Right.
instead of paying tax on 100 grand today, I pay tax on 100 grand over 10 years. I might be in a lower bracket over those 10 years. Okay, there's some present value tax savings. Find out how much the Yahoos are charging you for this.
Hmm.
You're like, your net return after paying them to do it all is like 2%, 3% at best. The fees on it are insane. And guess who's got to sign off on it before you can do it? Your accountant or lawyer. How much do they pay us to do it? Pennies on the dollar. They take a big old ass fee to do it. And we're going to provide you audit protection if you get audited. Who cares? After I pay you, it's barely worth it to begin with. People rip the Band-Aid off, sell the freaking crypto, pay the tax, and move on and do something better with your money. These huge fees that people charge for these DSTs and irrevocable trusts is criminal, in my opinion.
So to me, from what I've gathered in the content that I've watched from you, the couple times that we've discussed, the irrevocable trusts are the ones that you need to be really careful with, right? There's a time and a place. I remember you breaking this down last time you were on, and you said there's a time and a place, right? If you got a family estate, a farm that is going to be handed down to generations and generations, you got a castle that's going to stand for another 500 years, maybe an irrevocable trust would be the solution for you. But it sounds like this is where a lot of folks are getting taken advantage of. And I'm glad that you answered this question for the person that asked me if a 453 deferred sales trust was a scam. I can send them this clip. I'm glad that they haven't bought it yet, and
Yeah.
we can tell them what to watch out for. But it sounds like the irrevocable trusts are the ones that we got to be careful with.
Yeah, and now, by the way, the CRUT, Charitable Remainder Unit Trust, is an irrevocable trust.
Mhm.
The DAPT, Domestic Asset Protection Trust, is irrevocable. There's nothing wrong with those. So I don't want to say all irrevocable trusts are bad. Just be careful of the ones where they're charging you 10, 20, or 30 grand. There's your first sign.
Mm.
And it's asset protected, lock proof, bulletproof, blah, blah, blah. Any of that verbiage, red flag. Number two, the deferred sales trust. They're not all bad, but again, find out what the fees are they're charging for a glorified installment sale. I mean, that's all you're doing is just spreading the gain out over time.
Right.
And then if it's too aggressive, the IRS comes in and slams it. So if it sounds too good to be true, that's when you should pay for a second opinion, not Grok or ChatGPT for a second opinion. Ease.
So right there,
Sorry.
you guys got it. You guys got some of the red flags to watch out for. And so for everybody, we can get started with this. I guess before we even get to the trust though, too, Mark, we got, you got your businesses and we did this. We went through the trifecta structure last time we had you on and how you can set up holding companies for your digital assets or alternative investments. And there is a time and a place and a right way to do it. I guess for you, what would you caution folks on as far as maybe overcomplicating this process by creating different, entities to hold your crypto? What's the right way to do this and what should we watch out for?
You bet. And your guys are going to hear it in every industry, whether it's real estate or crypto. It's precious metals. Somebody is going to be promoting the Wyoming LLC as the get-all, end-all and charging twice what a law firm would charge. And they're promising incredible asset protection. Be careful. A couple points I want to make. Is the Wyoming LLC great? Yes, it is.
Mm-hmm.
Can it be expensive depending on who's trying to sell it to you? For sure. It can be over the top. We're like $1,700 or so plus the filing fee. We can even be less than that. And that's with a real lawyer on a call, planning out your trifecta, giving you strategies for the year, and you're getting an LLC to boot. This is not a click, click, click. Be careful of anybody charging more than $2,000 for that Wyoming LLC. So look at price and look at what you get. That's point number one. Number two, if you're going to put an asset in a Wyoming LLC, it will give you better asset protection generally. Again, we've got to look at, are you up for all the maintaining of it, having a bank account, doing your minutes every year, filing a tax return potential. You can't just set it up and say, I'm done.
Right.
There's going to be more fees. So go in with your eyes wide open on that. And then third, in this whole process, the LLC has to own the asset. You can't just say, well, I set up the LLC and my wallet over here that I have under my email, it's part of that LLC. Really? Is the account in the name of the LLC? Well, no, I got to go get an institutional account. Okay, then do it. Because if you don't have an institutional account in the name of the LLC doesn't own it. You can't just say it owns it. If I'm a plaintiff and I'm coming after you in court, which I go to court on occasion and I help in asset protection cases as an expert. If your LLC doesn't own the asset, how in the hell do you think the LLC is going to protect it? So you've got to find an exchange that will allow you to set up an institutional account without asking for your blood type and first child, then move the wallet into that institutional account that's owned by the LLC that has a bank account, the whole nine yards. You've got to treat it like a separate entity. It's called the corporate veil. And I know some of you guys you're like, yeah, Mark, but so-and-so said this is a crypto LLC, so it's okay. No. And whoever said that's probably not a lawyer. And they're selling it for twice the cost of a law firm. And I don't know, there's all sorts of companies out there doing that. I'm not trying to pick on anyone individually. There's companies out there, just online resources that are charging over the top for Wyoming LLCs and promising real estate investors big benefits and precious metal investors big benefits. Yeah. Who are these people making these promises? And have you done, again, a little bit of research or got a second opinion? That's all I'm saying.
Right,
If you
right.
don't like me, it's okay. Just do the work to really be careful.
Yeah, and I want to just reiterate, guys, that Mark's speaking generally from decades of experience. We've seen it all. There's nothing new under the sun. It gets kind of wrapped in different language and sales pitches, but these we've seen for countless years and decades. And I've seen this too in like the precious metal space, with like, platforms that sold precious metals in your 401k and they were way overcharging. I've seen my first experience in estate planning for crypto was seeing a company that was selling irrevocable trust for like 20 to 30 grand, I think was like the starting price. And so we've seen it all. We really have. And we just want to make sure that the community understands what to be aware of, what's necessary, and we want to educate everybody on, this matter. And so, Mark, I've had this feedback from people in our community where they're telling me that they're having trouble getting bank accounts for these LLCs that are basically holding companies for alternative assets or crypto, and banks don't want to work with them, right? And so, folks need to understand that there's significant burden and hassle that you have to overcome to establish all of this, and you really need to understand, why am I doing this, right? Why am I setting up this additional alternative entity, alternative holding company or entity for my digital assets? If you have a good reason for that and you do want to, go through this whole process, maybe it is the right solution for you. But I think, like you said, some folks are getting sold that this is a pretty simple, easy process when that's not what we're finding out.
No, and again, it could just be a rental property. It could be real estate of all forms. And again, precious metals or crypto. When I go to Wells Fargo, I'm here in Arizona right now. If I walk into an Arizona Wells Fargo and say, I need to open up a business bank account, Wells Fargo is going to go, great, show us your articles, show us your operating agreement, your EIN, and all this. Now, some of you may say, well, I don't need to do that because it holds digital assets. No, you do. Because how did the crypto get into the LLC? Did you buy the crypto and then contribute it to the LLC? Okay. So you need to have documentation for that with a crypto wallet in the name of the LLC, an institutional account. Then when you go to sell the crypto, the LLC needs to sell it. Where's it go? Into USD in the account of the LLC. So you have to realize, if you want the protection of this $100,000, $1 million set of crypto tokens or whatever you want, this wallet, you have to realize you don't own it anymore. You have to effectively be able to show that you've moved the asset into this LLC in all ways, shapes, and forms, from the wallet to the USD going in or out. So when you open up that LLC and I walk into Wells Fargo, they'll go, okay, show us your articles. Well, these aren't Arizona articles. In Wells Fargo in Arizona, I can only set up an Arizona bank account for an Arizona entity. So I've had clients get on a plane and fly to Cheyenne or Evanston to open up their bank account in Wyoming and then come home. Or they have to go to a online national bank. And we've got a couple banks we love to work with. And when we help clients set up LLCs, now they're using a national online bank that needs to be funded with at least $100. It's going to have an EIN. We're going to use that because when you go to get your institutional account, Coinbase or whoever is going to want to confirm that you have an actual operating LLC. And so these are the steps that the people selling you these expensive LLCs don't walk you through. And then they say it's all good. And just be careful who's making that promise.
Yeah. And I want to mention too that we have some community resources available, some of my other affiliates for Caleb and Brown and I Trust Capital and some of these others that definitely are well versed in helping folks set this up. So if you are looking for some of those platforms that, will help you with this process, we definitely have some of our affiliates are available for that. So when it comes to setting this up, get in touch with a law firm like Mark's, KKOS Lawyers, or one that's going to, provide the similar level of service that Mark's team does, that can help you set this up properly. because there is a time and a place to do it. We just want to make sure that folks aren't overpaying and that they have good purpose behind these entities and these structures and everything that you're doing, right?
Yeah.
And I think that I guess to bring this whole conversation home, Mark, it's about getting educated. And sometimes, maybe more often than not, the people that are selling these things skip over some of that educational process to sell that product to you. And so we just want to make sure that you're not just listening to Mark, that you're listening to other folks, getting additional opinions, and then making that decision. Okay. And that you're not in a rush. There's no reason to rush this process.
Yeah.
Your comments on that, Mark?
Yeah. You made 2 points there. The speed, there's no rush. Please be careful with any pressure, that there's urgency. Number two, there's a difference also between getting educated and getting legal advice. I mean, I can go get educated on Roth IRAs and Wyoming LLCs and DSTs and all these different structures. That doesn't mean I take that education and their advice and I have protection. See, as a lawyer, I have a fiduciary duty to tell you what's best for you. And if I give you bad advice, I'm liable for it. And ironically, the folks charging more than me aren't even lawyers, but I'm carrying malpractice insurance of millions of dollars so that if I screw up, I've got insurance coverage. But it's almost like going to have your baby delivered from someone that's not even licensed as a doctor, but they're really smooth and sound great and all that. But now, if there's a problem, I have no protection. But they were sure great. They were so nice, and they educated me on having a baby, but they're not licensed to deliver babies. So be careful taking legal advice, which setting up an entity, setting up a trust is legal advice, legal work. It's the unauthorized practice of law for anybody to go into the real estate industry and start offering Wyoming LLCs and not being a law firm. This is something the bar in every state is dealing with. They're trying to whack-a-mole with these companies that play like a lawyer and then charge more than lawyers because lawyers are bad communicators. A lot of times we want to buy services from people that make more sense. And so that's why they can charge more than lawyers. And then lawyers are like, what's the problem? Well, you freaking suck at communicating. So it kind of motivates lawyers to do a better job communicating, but it doesn't make it okay that someone that's a smooth talker can do that legal work in any industry.
And I think you made a good point too. The Wyoming LLC, I don't want to call it a Wyoming LLC scam because it's not. You can't just blanket say that it's all bad. But we've seen this in the real estate industry. We've seen it in crypto. We've seen it in a lot of internet money types of deals as well too. Right? This is very common,
Yeah.
and I think you've done a good job of laying out what to look out for when folks are making those decisions. Now, any final thoughts, Mark, before we wrap up this conversation?
Yes, it's kind of fun. Well, I've been sitting here because you get me so excited. Some of you have seen me looking down. I'm looking at my Gemini account in my Roth IRA and where XRP is today and other tokens, coins. And I'm also looking at 4 accounts right here that are for my 4 grandkids. And so right now, for those of you that have children or grandchildren, you can fund their Coverdell crypto IRA for up to $2,000 before April 15th for last year and $2,000 this year. So theoretically, I could drop $4,000 in each one of these accounts as a gift or pay them for services to help me in my business and take a tax write-off. They're not even going to pay tax on the first $15,000 or so this year of earned income. So I've got 4 accounts here that I could drop $4,000 in each. And I want to buy some XRP while the price is down right now. I believe, I read, do your own research. I'm a believer. I think it's one of the most utility-oriented coins and tokens as well. And the sky's the limit. And so these accounts could double or quadruple in the next 2 to 3 years, and I'm paying for their college tax-free. And if one of the kids don't use it, I can transfer it to another kid. So I'm building tax-free dollars in there, teaching my kids about education, investing, building a relationship with them, and doing it for my grandkids as well. And so that's why I love our crypto IRA over at Directed IRA, and also at Gemini, we have a platform where it's integrated. So the minute I open the account, I got my Gemini account ready to go, and I can go and buy all this different crypto. And I think just one other tip, it's not always about you. It's about the legacy you're leaving for your kids or your grandkids. And the Coverdell is a great way to go at it. Skip the Roth, go straight to the Coverdell.
Okay, love it. Well, folks, I'm going to put the link down below to schedule a free 15-minute interview with Mark's firm. That will
Thank you.
determine whether or not it's a right fit. If it's not going to work out, they'll send you to maybe somebody else. But you'll get a 15-minute call with them to determine if you can proceed. This is the firm that I'm using for my revocable living trust, for additional entities that we're going to be setting up here down the road. And I've just had a pleasant experience, and I've gotten great feedback from everybody in our community as well. So I encourage you guys to get on that link down below, schedule a free 15-minute interview, see if it's the right fit. And these folks can help you out for all of your legal and estate planning needs. And then we also got to mention, I did use your network of accountants to just hire a new accountant for myself, Mark. So thank you for that as
Oh,
well. Really
great.
appreciate that. I found a local guy down in Seattle, so here in Washington State, where I can figure out how to avoid this disaster of a tax situation here that I like to complain about. But I don't want to leave the nice Pacific Northwest. I just want to complain about it, Mark.
Yeah, no, I'm writing that down. I love it.
But I appreciate you, Mark, and we are looking forward to getting you back on the show. If you guys have any follow-up questions, drop them in the comments down below. I'll be going through them. Mark's team will take a look as well too, and we'll have Mark back soon to answer all of those. And we appreciate everybody for stopping by here today. If you could like this video on the way out, share it out far and wide, we would greatly appreciate that. And we'll get you back again soon, Mark. Thank you.
Thank you, Zach. Thanks for having me. We'll see you soon.
All right. Thanks, everybody. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.